Hi there, guys. Hope you guys are well. Guys, I just want to quickly make a video here on why small capital is causing you to fail in your trading. Just want to make this quick video and just go over the 5 main key reasons, in my opinion, why they cause you to fail. Because in my opinion, a lot of people are trading, are trying to flip small accounts like $100 accounts, $500 accounts, even $1,000 accounts. Just not enough capital. In my opinion, you need to be trading at least a 10K account. Um, Ideally, to go full time in your trading, you need to at least be trading a 30K account. If you think about it, how easy, when you're trading that $100 account, how easy is it for you to make $1? How easy is it for you to make $2, $3 on that $100 account? You got a $500 account. How easy is it for you to make $5? You must remember that in trading, in any business, any successful business, it actually takes money to make money. So anything cheap, any cheap business where there's not a lot of capital injected into that business, hardly any capital injected in that business, is going to be a cheap business and it's most likely to fail. You'll find that with first thing is with small capital, with that small account, you'll find yourself over trading, always pushing yourself. So that's why you end up taking 5 trades a day, three trades a day, 6 trades a day, 7 trades a day, because just always trying to push yourself. You're always trying to push that account. Second thing small accounts cause you to do is over risk and over leverage. You're constantly leveraging your margins constantly at 20, 30% or 50% a trade. Whereas if you had a bigger account, your margin could be as low as 2% or 3%, even as like 5% per trade, your margin. So your actual leverage can be really low when you have a bigger account. But because it's a smaller account, constantly over risking it, over leveraging, constantly stressed out with every trade that you take. So the third thing is that you're never satisfied with the profits. So you might be seeing $20 a trade, $30 a trade, $5 a trade, whatever it is, $1 a trade. In today's world, you're never seeing decent profits. Like you're never seeing $300, $500 a trade, actual money that'll allow you to quit your job, or actual money that you could actually live off. Decent money in today's world where it's actually valued enough. You're just seeing really small profits and you're not seeing decent profits. Frustrating you. So it also causes you to hold your trades too long. Then you might be up 20 pips, even 10 pips, 15 pips. You might be up 10, 15 pips, 20 pips. But now, because your account is so small, causes you to try push that trade now to 30 pips, 50 pips, 100 pips. Causes you to hold your trades too long, and the trade will go all the way back to your break even, or even go tap you out at break even, or tap your stop loss. Now you've held that trade too long. That that'll cause you to get frustrated. All of these things will, like a ripple effect. Never be satisfied with the profits. You'll hold trades too long. You'll over risk. All of these things just happen because of small accounts. They intermingle with each other. All of these bad habits of retail traders. Biggest thing I'm telling you right now is because you're trading with a small account. You probably already have the skill, probably already have the risk management, you have the psychology. Just need to take it over to a big account. So I'd probably say trade with small accounts for 2 years. You have to make that leap of faith and put in at least 10K. Maybe do it in stages. Start trading with a $2,500 account. That's what I did. And you move on to a $5,000 account. Then you move on to a 10K account. You move on to a 20, move on to a 30. So do it in steps. Take the same skill, you take the same psychology, you take the same risk management that you've built up smaller accounts. So build up the skill, build up the risk management, stick to your rules, your strategy and your system on small accounts, and then all you do is you take it over onto a bigger account. Because you got to be looking at your account on a percentage perspective. Let's just say you have a 50K account. How easy will it be for you to make 1% a day, or 1% every other day? It's $500. Even on a 50k account, I remember myself on a 50k account, I was making $1,000 a trade minimum, which is a bit high risk, but I was able to easily do between $500 to $1,000 a day with a 50k account because you have the power, because you have the capital behind you. It gives you power. It gives you. See, if you're trading a bigger account, it gives you that confidence, gives you that power, changes your mentality when you're trading a bigger account. You just almost feel like a market maker. Okay, so the final thing is it makes you think your strategy or your system doesn't work. So it just makes you constantly changing your strategy because you think it might be your strategy that's causing you to not catch 50 pip trades, 60 pip trades. But so it goes back to the fourth thing, which you think your strategy doesn't work, it'll cause you to hold your trades too long. All these things, it's like a person that goes to the gym and he weighs 70 kgs and he tries to get to 80 kgs. His goal is to reach 80 kgs in weight, muscle, but he goes to the gym and he's like lifting light weights, like lifting 30 kg bench press, and he's not eating properly. So like that guy, he's not doing things, he's not lifting the correct weights. Same thing as you trading with a small account. You're not trading with big enough capital to see results. Like your partner, don't know, they cook for you every night. Every night they give you a small meal. You know that you normally eat twice as much, but every night they cook you and give you a small meal. They cook you pasta, for example, and then they cook nice pasta for you, but the meal is too small. So every night you go to bed hungry. Like the same thing. It all goes back to satisfaction, and that's why you need a bigger account. You can start scaling up your trading and actually trading a make trading a reality, and then you live off your account. Never going to be able to do it with small accounts, and that's why you keep blowing up those small accounts because constantly these five things are just happening all the time, just causing you to blow up. You have to make that leap of faith, but do it in steps. Do it in steps. Don't do it too quickly. I'd say at least 2 years trading small accounts to develop the psychology, develop the skill, and move on to start trading bigger accounts. Just have to make that leap of faith, otherwise you're never going to reach your financial goals. Then you can, say now you're making $500 a day, so now you'd be able to make $2,500 a week. You could take out 1,000 for your week for spending, leave 1,500 in there. That 1,500 will allow the 50k account to build up to 100k. Once you've got a 100k account, now your daily goal could be $1,000, which is 1%, which is a bit high. Is a little bit higher, but I'm just giving you the perspective of percentages here, and compounding. Now that your daily goal now is $1,000, that means now you're making $5,000 a week. And with that $5,000 a week, you could take out 1,000, leave 4,000 in there. Okay, now the 4,000 each week, that now your account will grow to 150k. You'll keep going and keep going and keep going as long as you keep leaving capital in there, taking out what you need. Then the compounding effect will take effect naturally. I hope this was a bit of a light bulb moment for you guys. I hope this video helped. I'm off now. I'm gonna go walk my dogs. Catch you guys in the next one. Peace.